Dude, thanks for having me on Reese on the Road.
100%.
Try and make this worth everyone's while.
Thank
Not
you
embarrass
for
us.
trusting me with your brand.
Oh my God. Actually, be good.
So good.
Yeah, that was great. You know, I tell young people when they say I want to be an investment banker, I say why. I mean, I get it, I love it, I do it, and been doing it for a long time, but there's different paths to, kind of get to be banking, and finances become, even wider than it was certainly 25 years ago.
That looks nice.
Good swing there, dude.
Looks great.
I learned from him that, if you do the right thing and you give the right advice and you give the right level of attention and you're honest and you kind of lead with integrity, people end up trusting you, and if you do good jobs for people, that manifests itself into long-term relationships.
That's perfect.
Boom. That was great, man.
All right, Rocky, you want to introduce yourself to everyone?
Sure. My name is Rocky Pontikes. I am a senior managing director and co-head of investment banking at Mesirow out of Chicago. I've been at Mesirow for 24 years, almost 24 and a half. I grew up as a Chicagoan, went to school out east at Penn, worked on the buy side for a few years and made my way back to Chicago and became an investment banker. I was at Merrill Lynch for about 4 years and joined Mesirow in 2001 to start our practice. We work in the middle market. We do M&A, sell-side advisory for firms that are generally 25 to 300 million in enterprise value. Meserow's a unique place, been around 88 years. It's a diversified financial services firm based in Chicago. 21 offices nationally, 2 internationally, about 500 to 550 employees. It's employee owned, which makes it really unique.
Yeah.
About 200 or so of the employees own the firm. It's a great, culture and retention tool. Absolutely. As it relates to, attracting talent and creating a culture of where everyone kind of rows in the right direction. Yeah. So let me tell you a little bit more about our practice. We, investment banking group has about 50 professionals. We go to market across 10 industry groups. 5 of them are kind of under the industrial umbrella and 5 of them are outside of it. So we've got aerospace and defense, distribution and supply chain, packaging, industrial technology, and diversified industrials. And outside of industrials, we have business services, consumer and e-commerce, technology and services, healthcare, and food, beverage, and agribusiness. So we take kind of a holistic approach as it relates to those 10 industries and kind of lead with senior level bankers across each of those industry groups. And we're big believers that having senior level attention on deals from start to finish have a complete correlation with successful outcomes. And that's kind of all the way we've done it for 24 years.
Within the organization, where do you sit?
I co-lead our investment banking group. The firm itself has a number of different businesses across investment management, capital markets, and investment banking. So myself and one of my partners co-lead the investment banking effort. I'm always kind of been a deal guy, so most of my career has been across the broader industrials, distribution, and services arena, but was raised by one of my partners for better part of a dozen years, who was a bit of a generalist. So I've seen a lot of movies across a lot of different industries, which has kind of served me well. Most of our clientele are family-owned, kind of entrepreneurially led companies.
Oh, right, yeah.
About 2/3 of our business is that, and 1/3 is private equity clients.
Yeah.
I'd say
that's sell side stuff.
Sell
right?
sides, yeah, probably 90% sell sides.
Yeah.
We do some buy sides, we do some board advisory work. But we wake up every morning thinking about M&A and sell sides on behalf of our clients.
Where are y'all most active right now out of all of your different?
Yeah, it's been an interesting time. I'd say where we're not active is anything that is getting too negatively affected by some of the macroeconomic events that have been happening. It's funny, a lot of these companies have really withstood a lot of speed bumps. You date back to 2016 in Trump's first election. There was politics, there were tariffs, there was COVID, there was inflation, there was supply chain crises, there were a couple wars, and yet without too much hesitation and too much pause, there's been pretty decent middle market activity for a long time. saw our last peak in 2021, but in 2025 there's tariffs, and if you are involved in any type of movement of goods or services that are kind of coming from China and Eastern Asia, you're on the shelf. I mean, they're almost unsaleable. It's affected distribution companies a little bit, but really other than that, a lot of our clients have been unaffected, especially on the entrepreneurial side.
Yeah.
And it's been an interesting time because the vintage of private equity firms starting in 2021, a lot of those companies are kind of stuck right now. They just haven't achieved the returns, resulting either in zero interest rates or high multiples being purchased, and they're not kind of ready for sale. So it's really been a good time for private company owners to think about an alternative.
They don't have pressures.
Right. They're starting point zero. Right. So the difference between a $100 million deal and a $95 million deal doesn't necessarily mean that much in the grand scheme of things if you're doing the right deal.
Right.
So it's been pretty good from that perspective. Yeah. So as it relates to supply and demand, I think about M&A pretty simply. Good time to go is when there's not a lot of deals out there and the market's not overly crowded. And this year we've tried to be somewhat unscared as it relates to getting some of our clients' deals in the marketplace. It's been kind of a good time to be out there with good product, and the amount of attention that we're getting on some of our transactions is quite honestly overwhelming. I mean, sometimes it's good for the ego to get 40 bids on a first round basis, but pretty confusing when they're all on top of each other. but having said that, I think the big debate internally has been, are these buyers risk on? And I'm convinced that they are. We're starting to see deals get done at the agreed upon values, and people being excited on both sides of the table to get things to the goal line, which is reassuring.
Talk about sourcing of your family-owned businesses is different than sourcing a sell side from a private equity firm. How do you do that? That's probably the question.
Yeah, I mean, it's a relationship business, right? It always has been, whether it's family-owned businesses or private equity firm clients. These relationships are built over a long time. So in one bucket, you've got long-term relationships with companies that you've called on either because you have a friendship or a relationship with the owner, or it's within an industry area that you've done a lot in. We see a lot of deals begetting deals, so you do a plastic bottle deal, and we do a lot in packaging, or a flexible film business, or a paper bag business, or a corrugated box business, or a folding carton business. And it falls into direct marketing. It falls into just general marketing. We leverage Meserow's marketing group all the time via LinkedIn, via direct mail, via automated emails, and we generally know in the sectors that we cover the types of companies that are going to be attractive. So I think getting someone on the phone, being able to introduce yourself, always taking the attitude of, hey, we just would love to present the alternatives available to you, private company owner, in terms of what's available to you. We get a lot of transactions from ex-clients who've seen us in action. We get a lot of transactions referred to us by the lawyer community, the wealth advisor community, the accounting community, people that have gotten to know us, and they're the most trusted advisor network in many cases. Those are the people that business owners call when they have a problem, or when they have a succession issue, or if a strategic buyer called them and said, hey, I'd love to have a conversation. They don't know what to do. They call their trusted advisors, and then they generally will advise them to have a banker involved. So we kind of take the viewpoint of, at bats, give us a chance to meet someone, let us introduce ourselves and talk about our qualifications. And one of the things we always lead with is integrity, right? I mean, we're as honest as the day is long. We're going to give you honest advice. It doesn't serve us well to say, hey, you're worth 15 times when you're worth 10 times. It's not worth saying you're saleable when you're not, and working with the companies to do the right things. But sourcing, if you're in the role of being a managing director, sourcing and business development is where it's at. I mean, that's the key to the game. And
pipeline's lifeblood.
Pipeline and knowing how to build, the relationships and building the trust with these guys. I mean, for these private company owners, selling their company is one of the most important things they'll do in their lifetime. Outside of family and religion and a few other things, this is kind of their baby, and they want the attention, they want the smarts, they want a process that's run intelligently, and they want outcomes that, hopefully exceed expectations.
Sure.
Versus, kind of an overpromise and underdeliver banker story. With just because we're playing with a private equity player in the aerospace and defense industry, that industry is as hot as I've seen it.
Yeah.
Especially on the defense side, just given everything that's going on in the world.
Yeah.
The spending and what have you. I mean, just you've got interest from private equities, you got interest from strategics, you have folks that are paying absolute full multiples for technology, one-stop shop kind of attitude with some of these buyers as it relates to the supplier base and getting mission critical components into the right system. So our A&D guys, Adam Oakley and Andrew Carlos are killing it. I think the second one that we've been known for a long time is our packaging industry group, and we've probably closed over 300 packaging related transactions over time. We think about packaging as any kind of converter of paper, metal, plastic, or glass. So I always say everything on your table, or in this case everything in our golf cart, is packaging in our minds, except for your phones. It's a business that literally keeps on giving. We've sold $3, $4, $5 million EBITDA businesses. We've sold $50 to $80 million EBITDA businesses. We've created a number of the private equity platforms in the U.S. right now, which is often based on substrate, plastic or paper or folding cartons. And we can, in some cases, go to a handful, two handfuls of strategics and bring the right transaction into a value maximizing solution for our clients. And other times entrepreneurs want to create their own platform and continue working, and the ability to buy a platform and then consolidate across the United States, either geographically or through customer acquisition or through product extensions, is just proven to be a ridiculously good private equity investment for folks. So it's been it's just been a very, very active industry. It's been incredibly resilient. You've had supply chain go up and down a little bit, and some stocking and destocking of inventory, but all things being equal, the last 15 years in that industry has just been a winner. We continue to be one of the leaders, if not maybe the leader, in middle market M&A for packaging companies.
What was your entry point, maybe from like college into the professional world?
So went to Penn, and kind of not the traditional route. So Wharton undergrad, everyone and their sister wanted to be an investment banker, and I ended up meeting a couple of guys who were money managers. One of them was an ex-Drexel money manager from the old Milken days, and the other guy was a career money manager, and this was 1995. At the time, they were managing $1.2 billion or $1.3 billion of AUM, which these days seems like it's small, but back in the 90s, that was a really big fund. And at the same time, the number of investment banks covering funds of that size were huge. So I was 22 years old, had a good education, didn't know anything about Wall Street, and all of a sudden was kind of thrown into a situation where the strategy was long-term fundamental research and ownership of small cap value-oriented stocks, defined as like $1 billion or under in value. And it was two very seasoned Wall Street money managers and me. I had two great mentors, learned how to value companies, but I think more importantly, learned how to speak to adults. Sitting in conference room and asking a 55, 60-year-old guy, why are you selling half your stock, and having him look at you and say, young man, I've worked my entire life to get this liquidity, and try and uncover some of the drivers of why he's selling and why he wants us to buy, and asking some of the tougher questions. But the experience kind of framed what my future career ultimately was, because I'd go in the morning and I'd do work on an oil stock, and then at lunchtime I was working on a consumer products company. In the afternoon we were thinking about a diversified manufacturing consolidation story.
That's fun.
And learning how to value all those different companies, learning how to speak to adults intelligently and not embarrass yourself while they didn't have a choice whether or not we were going to be a shareholder of theirs. You did want to create relationships where you could call these companies, and oftentimes we would end up being significant owners of these public companies because they're relatively small and we had a lot of money. I think the other thing that was really interesting is we got called on by what used to be called institutional salespeople. 20 and 30 and 40-year-old folks who had a huge marketing budget, and were paid to make sure that we traded through them. And I literally could have gone to dinner every night in Manhattan, 5 days a week at the nicest hotels with these people. And eventually I said to a couple of them, I said, do we have to have dinner every night? Can we start going to some concerts, or go out and see some live music and what have you? So that ended up being a 3.5-year adventure that really framed what ultimately became my investment banking career.
Right.
I could have been in money management my entire career, and in approximately 98 my mom got sick and I flew back to Chicago. She had breast cancer, two-time survivor, so still kicking.
Wow.
And quit my job in New York. Was dating what is who is now my wife, Jersey girl, Jen, and ended up joining Merrill Lynch Investment Banking and kind of their global investment banking group. I had 3.5, almost 4 years of Wall Street experience. Joined as a third-year analyst, pretty quickly got promoted into an associate role, and worked at Merrill for almost 4 years. And I always say I didn't sleep for 4 years. That was kind of that was the gig. It was really an interesting time. We were in a group that worked with emerging growth companies across a handful of industries: education, business services, advertising and marketing services. And the internet in 98 was starting to boom. So spent a year taking everything that had a heartbeat public. So I was doing IPOs and secondaries across the broader market, flying all over the world.
That's fun.
Then something called the long-term capital management kind of debacle happened, and this huge fund blew up, and IPO market dried up. So we started raising private capital, private equity, for all these growth companies. And then the world changed again when the internet bubble burst, and we turned into M&A bankers. And the group that I was in was really unique because the Wall Street had started to verticalize across industry groups and specializations, but our group did all of that. And then, kind of pre 9/11, post internet bust 2001, I got a call from a headhunter that introduced me to my partner, Jeff Goldman. Jeff was a Lazard banker in the 90s, Salomon Brothers banker in the 80s, just one of the best known bankers, certainly in Chicago. And he had joined Mesirow. Did my thing and he did his thing, and I said, I'm going to take a bet on Jeff. And I think if I was honest, I didn't know much about the middle market. I was doing all these big deals. He had been doing all these big deals, and I said it could be an interesting place to hang out for a few years and try it out. Celebrating 24 years, this past June. So it's worked out. We've built a great bank. But kind of I tell young people when they say I want to be an investment banker, I say why? I mean, I get it. I love it. I do it, and been doing it for a long time. But there's different paths to kind of get to be banking, and finances become even wider than it was certainly 25 years ago. But
you mean within
broader finance, right? There's different paths, and it shouldn't be investment banking or bust. For young people, you can go and I learned how to talk to people, and I learned how to analyze balance sheets and cash flow statements and income statements, doing money management, and then leverage that into being a grunt investment banker and working my way up. And it's all about repetition and seeing deals and meeting people and learning how to build relationships. And this guy Jeff that I worked with is kind of the consummate generalist banker, but a guy who had built relationships for 25 years before I met him. And he's probably been doing it for 40 or 45 years now. And I learned from him that if you do the right thing and you give the right advice and you give the right level of attention and you're honest and you kind of lead with integrity, that people end up trusting you. And if you do good jobs for people, that manifests itself into long-term relationships and people referring you into deals, and having some trust in that important decision of thinking about selling your company. So that's how it all happened.
Like, looking back when you're entering into the banking world, is there anything in your mind that surprised you or that you wish you would have kind of like worked on as a skill?
Well, when you're young, you work on trying to get to bed and get some sleep.
Right.
But I've been lucky. I've had mentors that have always allowed me to work above my title, and I think as one of the leaders of Mesirow, I'm a big believer of putting people in situations where they have to speak and they have to be a little bit uncomfortable, and they're put in a position to ultimately do the work. I mean, this is a business where you have your titles and you have your totem pole. And as you work your way up, if you don't become a master at your individual levels, then you're never going to be the master of the universe in terms of being a managing director.
Yeah,
so,
right.
that's the same in a lot of different businesses. You kind of got to, do the grunt work and figure that out. But I mean, as it relates to, banking, the skill set's pretty broad. I mean, you got to be pretty good at talking to people. You got to be trustworthy. You got to be analytical. You got to know accounting and finance.
Yeah.
You got to be able to market. And you got to be able to, negotiate and do things where you bring two sides together that, buyers want to buy low and sellers want to sell high. So it's a pretty simple equation.
Yeah.
There's an old joke that says the perfect transaction is when everyone's just slightly upset about, the results.
Yeah.
And that usually means that you did a pretty good job. So, I think that's one of the kind of the key takeaways is, you put your time in and, you do the work and you learn how to, do all the hard stuff, because then it becomes easier, when you get older and you move up. And I think, as a young career, one of the reasons why people want to get into banking is that first 2 or 3 years is just a direct, straight up learning curve. And the iterations that you have, while painful, set you up for a lot of different industries. Entrepreneurship, private equity, investing, money management, or something completely different. But I always tell our young people that sometimes when you're grinding, you're up late and you're working on stuff, and you're around other people kind of doing the same thing, you don't quite understand how much you're learning until you remove yourself and you go do something else. And it's a compounding effect of hours and iterations and complexities and hopefully good bosses, but sometimes bad bosses. And why am I doing this? I don't understand. And then eventually you start saying, okay, I see the forest through the trees now. That makes sense.
Yeah. Money. That was good. Thanks.
That was great, man. Thank you for having me.
Absolutely.
It was a pleasure.